Well, I think it's a lesson learned. It's really important so that finally people maybe understand the difference between Bitcoin and crypto, which is something we in the space try to educate people on. And I think it will move fast in the sense that SBF has been apologizing publicly. He knows he's guilty. He's afraid of prison, so I think he's going to try to cooperate to reduce any sort of sentence. But he's trying to convince everyone that he's just guilty of bad accounting and mismanagement, which we know isn't true. Right. And his intentions are not going to be on trial here. His actions are.
You do differentiate cryptocurrencies versus Bitcoin, but the industry has lost $1 trillion in market value this year. What are your thoughts for next year?
Well, if you like volatility in this year, 2022, I think get ready for more of it. Bitcoin is certainly going to face more headwinds in this macro environment because I think that with the Fed trying to maintain its aggressive stance, raising interest rates, we're going to see they may have to be forced to pivot before they actually want to, because this is all in the face of mounting interest expense and tax receipts falling off a cliff and the deficit ballooning. So I think that they may have to pivot, but until then, liquidity keeps decreasing, and that is obviously a headwind for Bitcoin. I think we're going to see more choppiness, but as you kind of alluded to earlier, this is certainly a buying opportunity for those who are really understand the technology and see it as the future. So I'm going to definitely be buying here and for the next wave up. So Happy New Year.
And there you have it from Natalie Brunell, and she's sitting there talking about that there's a blatant difference between Bitcoin and crypto. And this is the only message that we try to advocate for you guys. You can make money in the crypto space. Bitcoin is 100% secure. Bitcoin is 100% decentralized. Nobody can come seize your Bitcoin. It can't be cut off. No one can steal it. There's Bitcoin, then there's crypto. And then you should also learn the self-custody and such. But what's she doing? She's buying Bitcoin. She's saying right now it's a low in the market, and we've been telling you that. Right now it's a huge opportunity to buy. Even though the price is $16,000, it's still a lower high in the macro with Bitcoin. And with that, what's happening, Crypto Crew? Sean's coming back at you, another cryptocurrency video. Getting straight into it, we're taking a look at some crypto news. Coinbase stock price jumps 12% following $100 million from the New York Department of Financial Services settlement. This settlement means the end of the New York regulator's probe, which Coinbase first disclosed in 2021. This price jump is likely down to investors now having clarity over regulatory matters related to the company. Coinbase first disclosed this investigation as a potential risk to its business in an SEC filing in late 2021. So this has been going on for a little over a year, and now there's clarity. And when there's clarity in favor of the company, that's why the price ricocheted how it did to the upside. This is definitely good for Coinbase and the crypto space in the midst of a bear market. And then an update from TA trader Alan. What's Bitcoin doing right now? It's forming a converging triangle into the next halving of April 2024. This triangle is also part of the next bull run, 73 weeks before the next halving. So what he did, he looked back from the previous halvings and seen when Bitcoin, had its blow off top or its peak, and came down and formed this type of triangle pattern before it blasted out. Same thing in 2017, it hit a peak, came down, formed this triangle pattern before it blasted out. Now it looks like it could be doing the same thing. Now, no one knows if this is going to be the trajectory. This could be a little bit more narrower. This could be a little bit more higher as far as the price, but you can see that overall the price may have a rally up, come back down, maybe pre-halving, and then blast off after the April 2024 halving. History doesn't exactly repeat, but it rhymes. As you see here, it touched the top, bottom, top, blast off. Top, bottom, top, then blast off. So you could see a situation where it's top, bottom, top, bottom, top, bottom, and maybe it gets squeezed right before the halving and then blast off after the halving. Either way, it definitely looks bullish and definitely looks like history could be rhyming. And with that, we have an excerpt from Preston Sight and also James Lavish. They're speaking at Bitcoin Pacific. They just recently spoke, and they're talking about the space. They're talking about the innovation. They're talking about what's going on in the crypto space. So let's hear what they got to say.
People talk about the end game. Are we in the end game?
I would say
maybe we are.
We have stepped into the end game. And here's the problem, right? So what Preston's describing as this inflation that becomes entrenched, okay? So the Fed's model is broken. The Fed is supposed to try to keep full employment, and manage inflation to keep it acceptable, right? So now you're in an environment where we have 130 some odd percent debt to GDP in the United States, okay? The problem with that is that we're running at a deficit. We're running at right now a run rate of $1.1 trillion deficit in the United States, okay? So that means that we have to issue $1 trillion, $1.1 trillion of bonds right now in order to meet that margin. Okay, but you're now issuing those bonds at an interest rate that's going up, right? So you're issuing bonds at an interest rate that's going up, which means you have to pay more interest, which means that your gap, your deficit is going to grow. That means that the next year you have to issue more bonds, right? So if you just look at where we are right now, I was speaking with my partner, Larry Lepard, before we came up here, and if you just pro forma out, which means that you just project out what it's going to look like next year, right now we're running $1.1 trillion of a deficit. If you add in $600 billion of tax revenue that we will not receive this year because of the one-time tax haven or tax benefit that we had in 2020 from all that money printing. Well, if you take that and know we have to print that, then you know, or we have to issue debt for that, then you know that we have $400 billion more of interest expense this year, plus a cost of living adjustment on Social Security and mandate programs, okay, of $150 billion. I mean, you're talking about a gap now that's $2.2 trillion next year. So we have to issue another $2.2 trillion of debt just to meet that. This breaks the Fed's model. They cannot raise rates at the rate that they want to and keep them where they need to bring that inflation down. And so it's a feedback loop that they will just allow inflation to run hot in order to raise GDP nominally, get a larger tax base nominally, and be able to pay down that debt.
And when you're talking about it being recursive, going back to this idea of consolidation of enterprise. So as they step into the market to fill that gap by just printing it, they're then feeding that lack of biodiversity among the competition in your free and open market, which just compounds on itself. And so what I think is often not discussed is when you look at the Fed and their actions right now, and any central bank's actions right now, they're trying to suck the demand out of the system. But the thing that nobody's talking about is maybe on the supply side, they're destroying the supply side so fast that it's actually outpacing the demand suffocation that they're trying to do to slow down the economy. And if that's actually playing out, you're not going to see prices drop like they've seen for 40 years when they do these raising of rates, because this is a different scenario now.